Welcome to MoneyWise on 938 Live. Joining us this morning is Dennis Ng. With the equities market looking forward to QE2 or quantitative easing 2 by the US Federal Reserve, how does this translate into the property market? Well, I spoke with Dennis Ng from housingloan.sg for his take on what 2011 will look like for the property investor, whether you already have an investment property and a home to live in, or you've proverbially missed the property bandwagon.
Okay, if you already have a house to stay in, you have one investment property already, then probably may not make sense for you to think of increasing your investment into property, because as a prudent financial planning, we shouldn't be putting too much money into any one single asset. So probably I would say that since this QE2 will be expecting to push up stock market, so probably part of your money can be considered to be invested in the stocks market instead.
So basically, you've said this before, that perhaps most Singaporeans investors, they like to, jump on the tail end of a spike. Would this perhaps, for the investor, the property market they've already missed their chance in the property market?
I think for the property market, is different segments will have different prospects. So basically for the HDB resale flats, because of the latest measures that take away one big chunk of the demand, because now anybody owning a private property, they cannot buy a HDB flat. So actually a lot of PRs, if they have homes in their own home country, let's say in Malaysia, Philippines, India and so forth, they might also cannot buy HDB resale flats. So as such, I think for HDB resale flats, both in terms of the transactions, the cash over valuation, and I think even for next year itself, even the prices might start to fall. So I think for HDB resale flats is as high as it can be already, quite likely. But let's say for the mass market condos, I think prices are also very high. So there's very little room for upside from the current prices. So seems like for the residential property market, the only bright spot left is the high-end property market. As compared to Hong Kong, the property prices for high-end properties in Singapore is still lower, and there is further room for upside.
Okay, if someone has missed the boat, would REITs be an alternative? Perhaps because of the fact that we've examined this at a different point in time, and we've seen that REITs came off from a very low base, and that's why perhaps they're not doing as badly as people anticipated. So would REITs be a good bet in 2011?
Yeah, possibly. I think in the next few months itself, as I mentioned, the stock markets are likely to do well. So even for the prices of REITs, it will just move up. In actual fact, I think there are some plans to launch about six IPOs of REITs in the next few months itself. So I think the REIT market is looking quite hot at the moment, and it will stay hot because currently some of the dividend yields of some of the REITs, they are at quite a high level. You can easily find some REITs which gave dividend of above 6%. So compared to the interest rate for fixed deposit, which is below 1%, compared to what you get from bonds, Singapore dollar bonds, a 5-year bond only yield about 1%, and the 10-year bond only gives 2% with interest. So compared to all these alternatives, I think REITs, some of them which gave more than 6% dividend yield per year, looks to be attractive and can be another way for you to invest in properties without actually buying one yourself.
Dennis, before you go, the banks are awash with liquidity, interest rates all-time lows. Should people be looking at perhaps restructuring or refinancing their mortgages if they haven't been already locked in?
Definitely, I think if you are currently paying interest rates on your housing loans of above 2%, then you are already paying too much, because most of the current housing loan interest rates ranges between about 1% to 1.5%. So now it's a good time for you to consider refinancing. And for some of you, let's say if you own a private property and the value has gone up a lot, and probably now your outstanding loan has also been reduced over the years, you can even consider applying for an equity loan, that is getting some additional loan from the increased market value of your properties, and you only pay a low interest rate of, let's say, 1.5% for this money that you borrow from the bank. So I think it's really as good a deal as it can get, because interest rate has never been at such a low level before.
Dennis Ng, founder of HousingLoan.sg, speaking to me, Keith D'Souza, on 938 Live for MoneyWise. 938 Live.